Yo, what's up guys? It's Josh. Welcome to week 4 of Stocks and NFTs here on Mcubed, Movies, Money, Marijuana. But before we start, a short disclaimer: I am not a financial advisor, nor do I claim to be one. Everything said here is for educational and entertainment purposes only. That being said, these are my opinions, so feel free to disagree in the comments below and let me know what you think. Today I wanted to talk about trading options. So what is an option? An option is a contract that gives you the right to buy or sell stock at an agreed upon price on or before a set date. You can also sell a contract to someone else, giving them the right to buy or sell a certain stock at a certain date. You can also sell a contract to someone else, giving them the right to buy a certain stock at the strike price, depending on the option, while you collect a premium on it. There are two types of options: calls and puts. A call option can increase and decrease with the stock price. A call option can be used to buy 100 shares of stock at the option strike price. Basically, a call option gives the holder, which is you, the right, not the obligation. This is the important part. Not the obligation to buy these shares at the strike price on or before the expiration date. A put option, on the other hand, is the exact same thing, but instead of buying, it gives the holder the right to sell a certain stock at a strike price on or before the expiration date. Let me give you an example by using a house. Say this house is worth $200,000 and you're interested in buying it, and you think it's gonna go up in value over the next 2 years, but you don't want to buy this house just yet. So you buy an option that will let you purchase this property for $200,000 between now and in the next 2 years. We can call the $200,000 the strike price and the 2 years the expiration date. But being able to do this isn't free. There has to be some sort of risk, because again, an option gives you the right but not the obligation to buy or sell. We'll call this the option premium. Say you pay $10,000 for this option, and in 1 year the value goes up to $300,000. Well, you can now exercise your right to buy the house with this option for $200,000, netting you a net profit of $90,000 because of the $10,000 premium we took out in the first place. But now imagine that the house after a year actually goes down in value from $200,000 down to $150,000. Well, I don't actually have to buy the house now. I can simply just take my loss with the premium. So instead of losing $50,000, I now only lose $10,000. This is the power of options. It gives limited risk involved while having an immense upside. Now, to keep everything simple and without going into more advanced terminology such as delta, theta, gamma, and so on, let's break down options into 3 main characteristics: strike price, expiration date, and the option contract multiplier. The strike price is the agreed upon price point which the holder can buy or sell his shares. Say you have a call option with the strike price of $100. Now say that this security goes up in value to $120. You can use your call option to buy or convert the shares of stock at the strike price of $100, potentially giving you $20 in profit per share. The same can be said when having a put option. Let's take the same security with the share price of $100. If this stock ends up losing value and goes down to $80, but you have a put option with the strike price of $100, you now have the right to sell this contract at $100 per share instead of the new lower price of $80, saving you $20 per share. Now, all options have an expiration date, which means that after this date passes, the contract you bought is no longer valid, and you lose the right to buy or sell at that strike price. Simple. And finally, the last characteristic is the option contract multiplier. Say you see a stock with a share price of $100. Normally you could just buy one share with those 100, but with option it's a bit different. When you see an option say worth $5, you couldn't actually buy that option with the $5. You would actually need to have $500 because an option gives you the right to buy or sell 100 shares depending on the type of action you bought. So in reality, we would have to multiply the price that we see by 100 to get the option's actual value, or what is called the option premium. I hope this basic explanation helped you figure out what options are. So let's move on to the second half of this episode and talk about NFTs. Today I want to talk about NFT games where you could potentially play to earn. So let's get started. The first game on this list is Axie Infinity. It is a game inspired by the Pokemon universe where you can breed, battle, and trade digital pets called Axies. This game is based on the Ethereum blockchain having its own token called the Small Love Potion, or SLP for short. Now, the one small thing about this game is that it has a small barrier of entry, which is you have to own 3 Axies before you can start playing the game. And Axies aren't cheap. If we go to the marketplace real quick, we can see that the cheapest of all Axies at the moment of recording this video is around $120. You multiply that by 3 and the price to play becomes $360. Not a cheap price to play a game. But you do have to remember, NFTs are an investment that can potentially grow over time. And by playing the game, you will earn cryptocurrency. Moving on to the second and third game on this list, which by the way are free to play. And the first one is Lost Relics, a free to play RPG powered by Engine and made with Unity for both Windows and Mac. It was released back in 2020 by CodeBit Labs. In this game, you can go through dungeons and discover different and unique artifacts or relics with different rarities throughout the dungeons. The items in Lost Relics are a mixture of fungible and non-fungible tokens, making sure that each item within the game has a limited supply. And according to the Lost Relics page, there are some relics that are so rare that only one exists. What makes this game fun is all the adventures, encounters, and dungeons are randomly generated, giving you the possibility of 4 billion different variations throughout the game. Lost Relics also supports cosmetics and pets on the marketplace with 4-player co-op and PvP coming soon. Moving on to the last game on this list, which is called Townstar. Released by Gala Games, it is a web browser free-to-play game created by the co-founder of Zynga, who created Farmville. In Townstar, you're competing within the blockchain ecosystem against other players for the top 200 best towns with the highest yielding of crops, giving you the opportunity to earn Gala tokens each week. The great thing about this game is that it runs on a 6-day cycle, meaning the world map is reset and there is a land rush for prime spots. Everyone can start from scratch. This allows everyone to enjoy the game without feeling like they're months behind. This also encourages people to experiment with different strategies or setups, which is a big part of what keeps this game fun and entertaining. You can start playing this game and start earning money through Townstar, and when you sign up with the link down below, you may have a chance of getting a free NFT. There are other games I would like to add to this list, but they're currently not out yet. But you can still check them out on the Gala Games website, with 3 of the titles being in development, while one of them having a pending node vote. That's it for today's video, but I hope you learned about options and about play to earn games in the crypto world. Please stay tuned for next week's episode here on Stocks and NFTs on the Mcubed channel.